know consumers across the country are benefiting substantially from the realization that gasoline prices are likely to stay cheap for some time, you still need to be selective when it comes to picking restaurant stocks because, well, a rising tide is not necessarily going to lift every single boat. So what can work in this environment? I want you to consider Dave & Buster's. That's Play, P-L-A-Y for all you home gamers. The chain of 81 venues that are one part restaurant, 1 part sports bar, and 1 part gaming. That was me, maybe. Okay, this has been a great growth story ever since the company came public nearly 18 months ago, as Dave & Buster's has an appealing concept with a ton of room to expand across the whole United States. However, the stock sold off hard at the beginning of the year, along with the rest of the market. And while it rebounded roughly 25% from its February lows, shares are still down 6% year to date. Now, Dave & Buster's just reported a solid quarter this past Tuesday, with the company delivering a 10-cent earnings beat off of a 43-cent basis, higher than expected revenues, up 13% year over year. Very impressive. And while the same-store sales were robust, that's up 6%, the stock hasn't done much, in part because the same-store sales guidance for 2016 was very cautious, I thought. Management forecasting normalized growth of about 2 to 4%. So what do we make of these numbers? Does the stock have more room to run? Or should we be concerned that business might be decelerating? Let's check in with Steve King, the CEO of Dave & Buster's Entertainment. Learn more about the quarter and where the company's headed. Mr. King, welcome back to Man Money.
Thanks, Jim. Great to be here.
All right, Steve, I read through the conference call and the notes, and to me, you got a real head of steam going. But at the same time, you did say, listen, we could go back to a more normalized earnings pattern. I thought 6% despite the storms was unbelievable. And I'm wondering whether there's a possibility that you are just being a little cautious, given the fact that the business has such momentum.
So, Jim, we guided during the third quarter that we thought that our long-term outlook was going to begin to approach our long-term guidance, which has been low single-digit comp store sales growth associated with about a 10% unit growth per year. And I think that our first quarter guidance continues to reflect that. We believe we're going to move towards that longer-term guidance. Still above it in the 2016 year. With 2 to 4% comp store sales growth and actually about 12% unit growth. But in the longer term, we really believe this is going to be about a unit growth story and that the step function change we really achieved over the last 2 years, we want to cement that home and make sure we continue to grow from there. But we think the longer term is in that low single digit range.
All right, well, let's talk about the unit growth. I was concerned that perhaps there isn't enough space. I mean, I'm from Philadelphia, and yours one is gigantic. But you did actually say that because of some closing of some stores by Sears, Sports Authority, you are by no means constrained by real estate to keep growing.
Yeah, I mean, we've identified over 200 sites in North America, the U.S., and Canada where we have literally drilled down to the individual street corner where we believe we can put a Dave & Buster's successfully. Recently, I think we talked about it the last time, the state of New Jersey has opened to us. They passed legislation that effectively allows us to operate in our current format there. So right there, we end up with another 5 or so stores that we could probably do in that state and are looking hard at that. But as you mentioned, there is a lot of opportunity in the big box world. There's a lot of Sears that have come available. There's several Macy's that have come available. You do have the Sports Authority bankruptcy that is creating some other real estate opportunity. And one of the things that we've heard consistently from landlords, particularly the mall operators, is that we're a traffic donor. And as a traffic donor, we're very attractive to them in terms of a tenant profile, somebody that they want to bring in order to help their overall traffic profile.
All right, well, let's go back to the same store. See, I guess what I thought is that I see you keep your stores very fresh. You add new drinks, you add new food. You're always adding new games. So, I mean, I think that if you went to Dave & Buster's, say, once a year for birthday, you would come back and say, wow, they got new stuff. I'm going to come there more often, and that there'll be more corporate events because it's different every time.
Well, I think that we've done a number of things. I mean, we've talked about new in the sense of we want to introduce new games, new food, and new beverage at the same time throughout the years. We actually have 8 different promotional windows that we do. We primarily lead with the entertainment side. I mean, we think of ourselves first as an entertainment company and secondly as a food and beverage company. Obviously, half the revenue is food and beverage, so it's very important to us. But we think the reason that people visit Dave & Buster's is because of the entertainment offering. So throughout the year, you're going to see us promoting the games, and we feel great about our games lineup for 2016. But you'll also see us interject sports into that mix, particularly around now with March Madness or during the third and fourth quarters where we typically are advertising a heavy dose of football.
All right, one last question, because I'm asking this of all the restaurant executives. Minimum wage going up, New York, California, hurting profitability?
Oh, you know, it's going to hurt profitability for us from the standpoint of that is, for the most part, issue of how much we're paying our tipped employees. So those people aren't really making minimum wage today. They're making far in excess of that. But the increases in California and the increase in New York raised its tipped minimum wage by $2.50 this past year, is really going to pay those people more. So it's a bit more pressure on us from a cost standpoint, but nothing that we can't handle within the context of what we anticipate for pricing this year.
Well, all right. Well, you've done a terrific job since you come public, make a lot more money than a lot of the other people in your industry. I want to thank you so much for coming on the show. That's Steve King, CEO of Dave & Buster's Entertainment, an inexpensive stock with a great growth story. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.